Good evening to all of you, and welcome to this week's weekly market presentation by SA Securities. So, as usual, we will be looking at the stock market performance for the entire week and also key economic highlights. And of course, we will be talking about global commodity market updates and international financial market updates as well. So, starting off with the market performance for the week, as you can see in the screen, it's like a picture filled with red, whereas S&P SL20 index and also ASPI index, the main two indices in Colombo Stock Exchange, gained only on Monday, whereas it remained to stay at a red territory within the next 4 trading days from Tuesday to Friday. So looking at each of the days starting from Monday, stock market slightly up on the very first trading day of the week under the revised index calculation method, which actually aims to reduce the volatility within the market. And as per the revision, the basis of the calculation for share price index has changed from total market capitalization basis to public float adjusted market capitalization. With the said reason, the idea of reducing volatility within the market. So when we have a look at the turnover levels, the turnover for the day amounted to be 18 billion, that is comparatively a higher figure, and that particular turnover was majorly boosted by the foreign deal in John Keir's holdings between two foreign parties. So that the transaction took place under two crossings with 214,000 shares and another 79 million shares traded in between parties at a share value of 161 rupees per share. That was the major reason for the said pickup, the said increase in the turnover levels. And if we have a look at the foreign purchase and sales, that of course amounted to be like 13 billion each with the said transaction related to John Keir's holdings. So looking at the next day, Tuesday, market entered to a red territory where ASPI declined by 173.94 points to close at 13,210.17. And together with that, S&P SL20 index also declined by 92.09 to close at 4,534.94. The said revision, the decline was majorly due to ongoing economic uncertainties, where investors being worried upon the prevailing economic uncertainties on rupee depreciation and the government not seeking IMF support and the existing fuel shortage and also the power crisis and so on. That was the basic reason for the C decline. And also we can assume the revision of ASPI can also have an impact on that. So when it comes to turnover levels for the day, that was only amounted to be 6 billion, comparatively lower from previous day. And the foreign purchases were reported only like 63 million, whereas sales stopped recording a net value of 233 million. And the same bearish pattern could have been observed during the Wednesday session as well, where ASPI further declined by 144 points to close at 13,065.75. S&P SL20 index also declined by 56 points to close at 4,478.34. The said drag down was basically attributed to price declines in LOLC, Sampath, and Selinco insurance counters. And having a look at the turnover, that was 5.3 billion, lower from previous 2 days. And foreign selling again topped on Wednesday, which was amounted to be 131 million, whereas only 63 million worth of foreign buying reported. And again, ASPI and S&P SL20 index further declined on Thursday, whereas ASPI declined by 180 points to close at 12,885.70, and S&P SL20 index further declined by 77 points to close at 4,400.91. turnover was relatively appraised, where it reached to amount of 7.59 billion, and the foreign buying actually topped on the day, amounted to be 284 million, whereas only 165 million of sales reported. So, as it was speculated, the revision of the key policy rates can also be a reason for this the continuing decline. And the counters like LOLC, Bill, and Expo managed to drag down the index. Same pattern on Friday, the last trading day of the week as well, whereas ASPI further declined by 22 points to close at 12,863.14. Now ASPI is hovering between the benchmark level of, behind or lower than the benchmark level of 13,000. And S&P SL 20 index also declined by another 20 points to close at 4,380.55. Turnover only amounted to be 6.3 billion, and selling topped, resulting 172 million for the day, whereas only 127 worth of foreign buying was reported. So for the week, SPI declined by 3.89%, S&P SL 20 index declined by 5.33%, and the net foreign outflows was amounted to be 207 million. So the market seems to be highly volatile with all the uncertainties, the crises that are ongoing. So with that, we could most probably expect this bearish momentum to continue for next week as well. Then moving on to key economic highlights. Earlier this week, it was reported that the headline inflation measured as a National Consumer Price Index was topped to 14% in December 2021, whereas average headline inflation also surged to 7%. So the said increase in the inflation statistics were majorly attributed by both the price pickups in food and non-food categories, whereas the ratios amounted to be 21.5% and 7.6% respectively. Within the food category, the vegetables and rice were the prominent contributors for the said increase, and within non-food category, the hotel and restaurant sector price pickups and alcoholic beverage sector price pickup result to said increase in non-food category. And then again, CBSL has recently released the external sector performance statistics for the month November 2021. So as of the statistics, Sri Lankan exports reached to a level of US dollars billion 1.21 for the sixth consecutive session, exceeding the 1 billion benchmark level. And that particular export level denoted to be the highest so far. And altogether with that, imports are also sold to 1.676 billion US dollars for the month, whereas nevertheless the improving trend in the export segment have shown that the trade deficit that has been narrowed to a US dollar 553 million for the month, whereas it was amounted to be a higher number during the comparative period, which is like US dollar 600 million in 2020 November. And tourist arrivals also pick up during the month, whereas zero values, the zero inflows will resulted in the comparative period in 2020. And this time it managed to report a value of 60 US dollar million. But on contrary, the worker remittances declined by 55.6% year on year, only up to 271 US dollar million reported for the month ended November, whereas the October figure even a little bit higher from that, which was 317 million US dollars. Despite all the encouraging activities that the CPSL has initiated to bring more worker remittances to the country, it seems like the value is like declining because the unauthorized channel seems to be paying higher per dollar than the incentive that the CBSL paying the extra 8 rupees per $1. And despite the fact that the export seems to be increasing, several other industry bodies have claimed and warned that there can be a possible hit to export related companies in Sri Lanka with the prevailing oil shortage and also not being able to pay for the supplies on time in obtaining raw material with the forex shortages that's been happening in Sri Lanka. So, with that, there is a higher possibility for the buyers to shift into competitive suppliers other than Sri Lankan companies. And that seems that the officials, the government officials, should pay much attention on improving exports and make sure the companies are working for the betterment of it and they grow higher other than getting hampered from all the crises around. So there have been other things to be concerned for manufacturing companies like the power crisis, oil shortage, everything can be badly impacted on export companies. And together with that, if they are unable to obtain their raw materials timely, they won't be able to fulfill the buyer's requirements on time. So government need to pay much more attention on this behalf. And when it comes to treasury yields further climbed up, whereas a 3 month yield went up to 8.63% over 8.49% in last week, 14 basis points up, and 6 month treasury yield also climbed up to 8.55% over 8.44% in last week, and 12-month yields also went up by 7 basis points to 8.55% over 8.48%. Now it seems the yield curve is kind of like inverted because short-term bills are paying much more yield than of the comparatively longer period holding treasuries. So when it comes to the foreign exchange rates, the rupee slightly managed to appreciate over the four currencies USD, GBP, UR, and JPY. And having a look at the international commodities market, commodities actually rattled over destruction alerts from Russia. Oil, if we consider oil, oil prices went up due to tight supplies from OPEC Plus, despite the surging demand and also the tensions between Western powers and Russia over Ukraine also have an impact on the oil prices because the Russia could be recognized as the major supplier of oil and natural gas to European regions. So that can have a possible impact on the rising figures in the oil prices. And gold prices remained to be flat on Friday, and that actually made a sharpest weekly decline since November. Since because investors are expecting the hawkish monetary policy of Fed to came into effect very soon, and this particular topic has been discussing for many weeks. And with that, the gold investors are thinking there would be a surge in dollar and treasury yields compared to gold prices, the inflationary hedge. So copper price also went down because of the same reason of hawkish signals from Federal Reserve, and aluminium prices for the week declined, but actually managed to increase during the last trading session of Friday, and that the reason is also the sanctions. If the sanctions put on to Russia, there can be a supply shortage in aluminium, so that's why the prices have been picked up. And if we have a quick glance at the international financial markets, Europe's main bourses fell because of the sudden stop in central bank stimulus packages and also rising fears between the West and Moscow over the Ukraine, and that leads to one of their worst ever starts to new year. Stock market fell down, and US stocks also fell down during the Thursday session. with its major three industrial stock indexes declined for the day. And Asian shares, however, rebounded during the Friday session as of the US economic growth and the performance from the Apple Incorporation impressive results show some kind of a offset to the bearishness that they had on Federal Reserve's hawkish signals. The Japanese Nikkei gained 0.209% to close at 26,717.34 during the Friday's trading session. But anyhow, some of the Asian markets fell down, incurring losses. Like Hang Seng Index fell on Friday, resulting its worst weekly loss since August, and that's basically because of the reason of expectations on monetary tightening by US Federal Reserves that is yet to come into effect. So that's basically the things I got to share from my end. Harin, over to you.
Thank you, Sachini. So let's look at gold for this week. What has happened over the past few days, and whether the price has rejected or made a pullback or a correction, or whether the price is actually inclining or declining. So basically, looking at gold, we were previously able to see how the price actually made its way above the level of 1800 psychological area and made to the daily resistance level of 1840, 860. So after getting rejected from that critical area of daily resistance 1840, 1860, gold came back to the level of 1800 psychological area and started trading below the 1800 psychological area. So apparently gold closed at 1791.65 for the previous week. So basically, if it sustains below the psychological area of 1800, this could basically mean that the daily support level 1740, 1760 could be once again tested. So with that being said, the moving averages of course indicates a bearish momentum, since we can clearly see that there was some sort of a crossing happening again, and we'll be able to expect it again in the coming week. And also the price is actually trading below both the 18 and 8 EMA levels, which indicates a bearish momentum in gold. So even though there's a bearish momentum, looking at the price of gold, basically it seems to be quite consolidating still in between the daily support level 1740 and daily resistance level 1860. So overall, looking it from a major bigger picture, we can clearly see that the price is actually consolidating. But from the daily chart, we have a couple of higher highs, higher lows, higher highs, and then again drops, which basically goes as lower lows, lower highs, lower lows. So therefore, it is in a lower low formation now. So a lower high could be somewhat around expected in again 1800 zone, and then if it's sustains below that 1800 key level, we might be able to see it coming further down to the daily support level 1740, 1760. So looking at our all share index, what has happened? So previous daily support level 12,950, 13,000 has become initially daily resistance level as the index started to trade below the moving averages and also the psychological area of 13,000. So this could potentially mean that basically the index could further decline if it sustains below 13,000. It's a quite risk level. So therefore, it could further decline to the daily support level 12,450, 12,500. With that being said, the RSI level comes to a level of 54.36. And also we might be able to see some sort of a crossing happening, bearish crossing happening from both the EMAs. So this could take place after a couple of weeks or days or weeks. So since actually the index is below both 18 and 80 EMA levels, so worst case scenario, it could further decline to the daily support level of 12,450, 12,500, and from thereafter it could actually come down to the daily support level 11,950, 12,000. But if it manages to come back to the level of 13,000 and process above 13,000, then we'll be able to expect the previous daily resistance to 13,450, 13,500 once again. So even though here, even though over the past couple of days, even the market was declining, looking at the Friday candle and the Thursday candle, we have quite bigger wicks. So this indicates that even though it was bearish, there was some sort of volume coming up again, where the market actually, where the selling pressure gets absorbed. um yeah, getting absorbed from, but that's what we can see from the candlesticks and the candlesticks and its wicks, from its wicks basically. So we'll see what's going to happen in the coming week. So long as it sustains below 13,000, it could fall further, go down, and if it manages to cross us about 13,000, we'll be able to expect the previous daily resistance 13,450, 13,500 once again. So looking at our top pick of the week, which is Richard Perry's Rich. And previously we were able to see that previous weekly resistance 22.523 was broken, and the price managed to reach the weekly resistance 26.527, and also make a certain high of 29.5 on the January 12th. So we had the price above the weekly resistance 26.527 over a couple of times, and price failed to sustain over that key level of weekly resistance, and then the price came back to the level of weekly support 22.5 23, where initially on Friday, which is 28th, we were able to see it made a low of 23. So therefore we do have some sort of a bearish momentum over this counter. With that being said, there is some sort of crossing going to happen, so not yet, but from the 18 and 80 EMAs, since the price is actually trading below both the 18 and 80 EMAs. But since it is near daily resistance, which is 24.7525, if the price manages to cross about 25 again, we'll be able to expect the weekly resistance 26.527. But if it fails, it could again come down to the weekly support 22.523. So therefore it's at a crucial area. So we'll just keep a watch on this counter, because if it sustains about, if it crosses about 25, it could go up again. If it sustains below 25, it would actually come down further to the weekly support 22.523, as the price closed at 24.5 for the week ended 28th January 2022. So thank you, and I wish you all I wish you all a great weekend, and thank you for joining.